What if I told you that there is a single company quietly connected to thousands of the biggest companies in the world, a company that manages more money than the entire economy of many countries, a company that has investments in Apple, Microsoft, Amazon, Tesla, and many other global giants? In this video, you will discover how this company became one of the most powerful financial institutions on the planet, how it manages trillions of dollars, and what ordinary people can learn from its strategy. By the end of this video, you will understand how modern finance works and how powerful investment firms influence the global economy. The company we are talking about is BlackRock. BlackRock was founded in 1988 by Larry Fink and a small team of financial professionals. At that time, it was not a massive empire. It was simply a small investment firm with a new idea about managing money and risk. Larry Fink had already spent years working in finance. Early in his career, he was known as a talented bond trader. But after a major mistake that caused his company to lose nearly $100 million, he learned a powerful lesson. In finance, managing risk is just as important as making profits. That lesson became the foundation of BlackRock. Instead of focusing only on quick gains, the company focused on understanding risk, studying markets, and building better systems to analyze financial data. This careful strategy slowly attracted clients such as banks, pension funds, and large financial institutions that trusted BlackRock to manage their money. As the company grew, it built one of the most powerful financial technology systems in the world. This platform is called Aladdin. It analyzes financial markets, measures risk, and helps investors understand how their investments might perform during economic changes. Today, many banks, governments, and institutions use this technology to analyze markets. This shows how deeply BlackRock is connected to the global financial system. Over time, the company expanded its services and began managing assets for retirement funds, universities, governments, and major institutions around the world. These organizations trusted BlackRock because of its focus on research, technology, and long-term investing. One of the biggest turning points came in 2009 when BlackRock acquired Barclays Global Investors. This acquisition dramatically increased its size and introduced a powerful investment product known as ETFs. ETFs, or exchange-traded funds, allow investors to buy a basket of many different stocks with a single investment. Instead of choosing individual companies, people can invest in an entire market index. This simple idea changed the way millions of people invest. BlackRock manages one of the largest ETF brands in the world called iShares. As ETFs became more popular, BlackRock grew even larger. Today, the company manages more than $10 trillion in assets. That number is difficult to imagine. It is more money than the total economy of many countries. However, it is important to understand something. BlackRock does not personally own all that money. Most of it belongs to clients such as pension funds, retirement accounts, governments, and large institutions. BlackRock simply manages and invests that money on their behalf. But even though the money belongs to clients, managing that much capital still gives the company enormous influence in financial markets. When large investment firms buy or sell assets, markets react. If they increase investments in certain industries, those industries may grow faster. If they reduce exposure to specific sectors, those markets may slow down. Because of this influence, BlackRock has become one of the most important players in global finance. Another interesting fact is that BlackRock itself is a publicly traded company. This means many investors own shares of BlackRock, including institutions, retirement funds, and individuals. This shows how interconnected the financial world really is. Large investment firms invest in companies. Those companies create products and services used by millions of people, and the profits eventually return to investors through pensions, retirement accounts, and investment funds. This system is the foundation of modern capitalism. Some critics argue that large asset managers like BlackRock have too much influence over corporations because they hold shares in thousands of companies and can vote on important decisions. Others believe that large asset managers provide stability and professional management to financial markets. Regardless of which opinion you agree with, one thing is clear: BlackRock has become a central force in the global financial system. But the story of BlackRock is not only about money and power, it is also about discipline, patience, and long-term thinking. Larry Fink and his team built the company by focusing on risk management and long-term investing rather than short-term speculation. They understood that markets move in cycles, prices rise and fall, economies expand and contract. Successful investors do not panic during market volatility. Instead, they focus on long-term growth and carefully manage risk. This is one of the most important lessons that ordinary investors can learn. Many people enter financial markets hoping to make quick profits, but real wealth is usually built slowly through patience and consistent investing. For example, many of today's biggest companies faced major challenges before becoming successful. Apple struggled during the 1990s. Amazon spent years reinvesting profits before becoming a global giant. Investors who believed in these companies and stayed patient during difficult times were often rewarded in the long run. Another important lesson from BlackRock's success is the role of technology in modern finance. Financial markets today are driven by data, analysis, and advanced technology. Platforms like Aladdin process enormous amounts of financial information to help investors understand risk and opportunities. As technology continues evolving, the future of investing will become even more data-driven. Young investors today have access to tools and information that previous generations never had. Online platforms, financial education, and digital investing have opened the doors for millions of people around the world. But opportunity also requires responsibility. Smart investors focus on learning, discipline, and long-term planning instead of chasing quick profits. BlackRock's journey from a small investment firm to the largest asset manager in the world shows how powerful long-term thinking can be. The global financial system may look complicated, but the core idea is simple. Money flows to opportunities. Investors provide capital to businesses. Businesses create products and services. Those businesses generate profits, and those profits return to investors. This cycle drives economic growth. Companies like BlackRock simply operate on a massive scale within that system. Understanding this system can help ordinary people make smarter financial decisions. Instead of being afraid of finance, people can learn how money works and participate in building their own financial future. The real moral lesson from this story is simple. The most powerful advantage in the world of money is not billions of dollars. It is knowledge. People who understand how money, investing, and risk work can slowly build wealth and create opportunities for themselves over time. And the more you learn about finance, the more control you gain over your own future. If you enjoyed this story and want to learn more about money, business, and the powerful companies shaping our world, make sure you subscribe to the channel Arsam Explains Money.